Hello, and thanks for tuning into our video workshop, where you'll learn more about the Paycheck Protection Program for small businesses with employees. My name is Blessy Thomas, and I am the Project Director for the Philadelphia MBDA Care Center, which is operated by the Enterprise Center. The purpose of the center is to offer training, education, and advice to businesses in terms of recovery from the impact of COVID-19 and the resulting business restrictions and shutdowns. In this video, we'll cover three primary areas of focus. First, we'll review the statutes and regulations related to PPP. Second, we'll walk you through the application, key fields to complete, and backup documentation to provide with the application. And third, we're going to go over important deadlines and other critical information. Let's start with some context. Through June of 2020, more than 4.8 million PPP loans were approved, valued at $521.5 billion, which were processed through 5,461 lenders. Approximately 90% of loans and 95% of the funding went through banks. Almost 18% of the loans and 22% of the funding went to economically distressed areas. We know during 2020's PPP rounds, many small businesses, especially businesses owned by underrepresented groups, were left out. This may have been due to challenges such as lack of banking relationships, lack of resources to produce documentation in a timely manner, which is challenging as this loan is on a first come, first serve basis, or perhaps because businesses did not access the full allowable funding amount due to lack of understanding on how to calculate the loan amount. Therefore, it is critical to provide this kind of training, service, and support this time around. We want as many small businesses as possible that are eligible to apply for PPP to access the funding so that businesses can sustain and are better positioned for long-term growth. At this time, I'll turn it over to Andrew Budraka and the Morgan Lewis team to kick off our workshop today.
And thank you, Blessy. Thank you to the Enterprise Center for involving us in this important effort. We are excited to be here with you today to help raise awareness for PPP Round 2 and help you all with improving your access to the program and your preparation for the program and making sure you understand the process as it relates to you and your businesses. So my name again is Andrew Budraka. I'm a partner at Morgan Lewis, which is a law firm that has a large office in the city of Philadelphia. Today, I'm joined by my colleagues Jamal Hill, Ben Stango, and Scott Berman. We all serve on a task force at Morgan Lewis that has been working on the federal COVID pandemic stimulus relief programs since March of last year, when the pandemic first struck and the shutdown orders and various problems started to arise for small businesses. So we're very familiar with the Paycheck Protection Program that we're going to be talking to you about today. And we are also going to be briefing you on the second round of the program, both for first draw, people that could not take advantage the first time, and this is their first time accessing the program, or second draw borrowers to decide to do so again. Morgan Lewis, again, we have a lot of task forces focusing on the COVID-19 pandemic in various areas. And we do have this resource page. To the extent you have interest in other areas, please do check that out. So I'm going to turn it over now to Jamal Hill, and Jamal's going to give you guys a quick overview of the program itself. Go ahead, Jamal.
Thanks, Andrew. Hi, everyone. So just starting with some background about how we got here. So the CARES Act, which was passed in last March, that provided for the initial Paycheck Protection Program. And the bill that was recently passed last December, it provided for an additional $900 billion in pandemic relief, $285 billion of which is dedicated to the extension and expansion of the PPP program. So this new relief package revises the PPP program. It reopens and strengthens it for first-time and second-time borrowers. but it also extends the lifetime of the program until March 31st of this year. So this new iteration of the program is designed to specifically target smaller and minority-owned businesses. Again, many of whom were left out in the first iteration of the program. So it allocates $15 billion to community lenders and small depository lenders for initial PPP loans and also second draw PPP loans. $35 billion are earmarked for first-time borrowers, and $15 billion of that $35 billion goes to smaller first-time borrowers with 10 or fewer employees, or loans of less than $250,000 in low-income areas. And $25 billion is allocated for second draw PPP loans for smaller borrowers with the same threshold of 10 or fewer employees, or less than $250,000 in low-income areas. So the new first-time PPP loans were made available starting on this past Monday, only for community financial institutions. And PPP today is actually the day that the program accepts eligible applications from eligible lenders that have $1 billion or less in assets. So starting next Tuesday, January 19th, participating financial institutions will be able to make first or second draw loan requests for all eligible, and that's all eligible lenders. As with the first iteration, PPP loan funds will be available on a first come, first served basis. So here we have a comparison chart that compares the first time loans with the second draw loans, right? For eligibility, for first draw loans, employers can have no more than 500 employees. For second draw loans, that threshold is 300 employees. The same affiliation rules apply to first draw loans as well as second draw loans. And we'll go into a bit more detail about those affiliation rules a bit later. We also note that for the second draw loans, the employer must have used or planned to use the full amount of the original PPP loan. And they also must have experienced a 25% reduction in revenue in the first, second, or third, or fourth quarter of 2020 relative to that corresponding quarter from 2019. Maximum loan amounts for first draw loans, the maximum you could receive is $10 million. For second draw loans, that maximum is $2 million. In both cases, loan forgiveness is non-taxable, and business expenses that are paid with loan funds in each case are tax deductible. So we do note to receive forgiveness, full forgiveness, 60%, in both cases, 60% of the cost allocation must be used for payroll funds, and 40% must be used for non-payroll costs. And those are minimums. So again, some specific details about the first-time PPP loans. So again, these are loans up to a maximum of $10 million with a 1% interest rate. And the loan amount is the lesser of the $10 million maximum and 2.5 times the borrower's average monthly payroll over the past 12 months, for the prior 12 months. It excludes compensation, any compensation for employees that are paid over $100,000 annually. And the SBA guarantees 100% of the loans that are issued during the period of February 15, 2020 through March 31 of this year. And so these are just some examples. This is a non-exhaustive list, but these are some good examples of what the loan proceeds could actually cover. So again, for forgiveness, we note that it is, a completely 100% forgivable loan, provided that the borrower spends at least 60% of the loan on payroll costs over a time period or covered period, as we call it, between 8 weeks and 24 weeks. But that remaining 40% must still be allocated towards expenses that are allowed during that covered period. Now, the amount of forgiveness you receive will be reduced if greater than 40% are used toward payroll costs or non-payroll costs. If there are any reductions in headcount, or for reductions in salaries that are greater than 25%. So now I'm going to hand it over to my colleague, Ben Stango, who's going to talk more about the PPP loan application.
Thanks very much, Jamal. And thanks to all of you for joining us today. So I'll be talking now in a little more detail about the application process itself. And in a couple slides, we're actually going to be stepping into the application, walking through the information that you'll be providing there. And then following my part of the presentation, Scott's going to rejoin us and actually walk you through some specific calculation examples. So hopefully by the end of this portion of the presentation, you'll walk away with a really strong understanding of what do you need to have in hand to complete an application? What's the process for moving it through the lender's system? And how do you get to the numbers that are applicable to your business? So first, you're going to be applying through an approved lender. I'll note that the Enterprise Center is an approved lender, so you can certainly work directly with the Enterprise Center. There are a variety of lenders throughout the city of the greater Philadelphia area that are approved lenders. You can find a list of them on the Small Business Administration's website. Generally, we recommend working with an existing lender of your business if they are a PPP lender, because it will cut down on the amount of introductory new client information that you might need to provide to that lender. Next slide, please. Great. So in terms of the eligibility for the program, we know that most folks joining us today, most folks watching at home are eligible small businesses for this program because the key threshold is under 500 employees. Now, there's a variety of other factors here that come into play. If you have certain types of ownership that draw in affiliated companies, and their employee numbers might count, that could put you out of the eligibility bucket. We know that's not the case for most folks here. There are specific types of businesses that are excluded, and there's an ineligible list that's available on the SBA's website as well. Those are businesses, for example, that just hold real estate passively. Private clubs are ineligible. There's quite a mixed assortment of ineligible businesses, not exhaustive by any means in what's in the legislation, but available on the SBA's website. And we certainly recommend taking a look at that excluded list to make sure that you don't fall into any of those categories. Sole proprietors, independent contractors, and self-employed persons are certainly eligible for the program. And new to this expansion of the PPP is the inclusion of 501c6 organizations. C3s are already eligible and are eligible for the extension. Next slide, please. All right, so now you see on your screen the actual application for the PPP loan. We'll walk through some of these fields, and I'll try to provide some additional commentary on what exactly is going to be required here. So the basic information, your business type, address, all of that, it's kind of self-explanatory, but I want to use that as an opportunity to say it's important to have all of your basic organizational documents at hand in case they're requested by the lender. So your formation documents with the state of Pennsylvania or Delaware or wherever you're formed, your basic tax documents, proof of your EIN, things of that nature, really critical to have on hand and available to you. We discussed the size standard, 500 employees or lower for first draws, 300 employees or lower for second draws. Monthly payroll information. So this is something that, as I mentioned, Scott is going to go into in detail in terms of calculating payroll if it's a single person, if you're the only owner of your business and you just take draws from the business. We'll look at some specific examples, but this is how you get to your loan amount. That 3.5 times average monthly payroll, or for folks in the accommodation and food industry and are taking a second draw loan, 3.5 times that average monthly payroll. The purpose of the loan, Jamal touched on these a bit, and I'll go into a bit more detail. So for the first PPP, we saw payroll costs, rent, mortgage, interest, utilities. Those were the key categories. Now, as part of the 40% that you're able to spend that's not towards payroll, that 40% bucket, the SBA, Congress has added operations expenditures, costs of property damage, supplier costs, and worker protection. So these are fleshed out in more detail in the interim final rule by the Small Business Administration. And we at Morgan Lewis have summarized this new PPP with links to these more specific documents from the SBA. We recommend taking a look because they go into full detail on what's included here. So for example, worker protection expenditures, any expenditures you're making on PPE or plexiglass shields or things of that nature, those are now part of the 40% of the loan that can be forgiven. So this is really an expanded opportunity to have forgivable expenses show up on your loan. You'll want to list any owners of 20% or more. That's certainly important if that's the case for you. And that pulls in the affiliation question. And that's a point in which you're going to want to have a very detailed conversation with your lender about exactly what your situation is. Then as you look towards the bottom of the page, there are questions, yes, no questions, that you got to get right in your application. These are really critical for eligibility. They fit to what you're certifying to as a borrower. So there are specific questions about your personal legal history, if there's any criminal activity within recent years, the credit history of the business, things of that nature. Again, got to make sure you get those right. Got to make sure you can answer confidently. Let's go to the next slide, please. Here, so I'll talk a little bit about necessity and just kind of emphasize what you are certifying to. So necessity is key from the perspective of is key from the perspective of whether or not you are able to apply for this loan, apply for PPP, and it comes back to, have you exhausted other sources of liquidity? Are there other monies that you could have accessed? Did you have an existing line of credit? Has someone individually been putting personal funds into the business that stopped doing it, but that's an option? PPP funds are available for small businesses. We think most folks joining us today are eligible to be able to receive these funds, but they can't be the first option. The government really wants to make sure that before you seek taxpayer dollars, you've looked for other sources of funding, and they're just not that great. They're really going to be damaging to the business to take on a super high interest loan, something of that nature, or they're just totally not available. And then you can go to the PPP. The other aspect of this is if your business has been doing really well, these funds aren't necessary. This is rare. We expect that folks who are interested in this program have not had booming business over the course of the pandemic. But if you're a small business version of Zoom, and your business has been going through the roof, you are not eligible. These funds are not necessary for your business. I want to note that your business has to have been in operation since February 15th, 2020. This wasn't necessarily key during the start of the program, but now it's pretty important because a long amount of time has gone by. Businesses have been formed. And if your business was formed after Feb 15, 2020, you are not eligible for the program. Lastly, these certifications, the parts of the application where you'll actually be initialing, you want to again make sure that these are factually accurate, that they're correct. It's regarding the use of funds, your promise to repay. This all carries substantial personal risk. If any of this information is knowingly submitted falsely, we're sure that you're going to be able to confidently make these certifications in your application as long as you kind of do your due diligence, make sure you understand what the question's asking, and respond accordingly. Next slide. All right, so with that, I'm going to turn the mic back over to Scott to talk through additional needs for your application and some important examples.
Okay, great. Thank you very much, Ben. So just to give you guys a brief rundown, I'm going to discuss the materials that you will actually need when applying for a PPP loan, but also when you are creating a relationship with a lender. Then I'm going to go into detail on the IRS form Schedule C that you will have to complete to include as part of your PPP application. Then I'm going to go into some examples, and we have some detailed calculation slides that actually run through exactly how the SBA wants you to be calculating your loan amount request. So on this first page here, you can see a lot of the documents that Ben was talking about on the prior slides. But when you are creating a relationship with a lender, the lender has to make sure that you are who you say you are. And so they are mandated by law to have these customer identification program questionnaires. And so a lot of this information will be identification information, but to reiterate what Ben said earlier, you really need to have on the ready all of your organizational documents for your business. So you can see some of the specific documents on the page there that you'll need, and you just want to make sure that you have those on hand when you are ready to create a relationship with your lender when you're applying for the loan. So the next slide here is actually a picture in very small font of the Schedule C IRS form that you will have to complete to include along with your PPP loan. Now, you can see at the top of the page, we've included links to the form itself and the instructions. The instructions are really important because they really run through every single line item of the document and how to fill those out. So just from a high level, I'll probably discuss part 1 and part 2 of the form, part 1 being income, part 2 being expenses. And you really need to have these down pat so that you can get your net profit number, because that number is what is included on the PPP application that Ben showed you. And that's the number that you will use as your baseline to get your loan amount request that you ask from the lender itself. So you can see some of the key items on the slide here for part 1 are your gross receipts, and that's going to be your revenues for the year, your returns and allowances, which are just things like if you run a clothing business and you have customers come in and they return a purchase, that's where those types of things fit. And then your cost of goods sold is actually page 2 of the form that we don't have here, but the instructions run through exactly how to get your cost of goods sold. And they basically give you an option for if you keep track of your inventories themselves, or if you don't have a method for that, that's fine. The instructions run through that. But your gross profit will be your gross receipts minus your returns minus your cost of goods sold. And then you take that gross profit number and you add in other income, which again, the instructions go into detail on, but it's going to be things like tax credits. And once you take those two numbers, that gives you your gross income. Then part 2 of the form is your expenses. Again, you can see a bunch of different line items there. You can see advertising, interest, you can see employee benefit programs, utilities, wages. There's a lot of line items that the instructions run through, but essentially you will get your expenses for all of those line items and you will total them onto line item number 28. Once you get your expenses and you have your gross income, you can take your expenses, subtract them from your gross income, and that gives you your tentative profit. You are then going to take your expenses for your business use of your home, if that applies to you. And again, the instructions go into detail on that, but you'll take that out of that tentative profit number, and that will give you your net profit number on line item number 31. This is very important because that line item is what you are going to include in the PPP application loan amount request that Ben discussed before. So I'm going to pass through these slides relatively quickly so we can get to the examples, but slide 21 that I'm showing you here and slide 22, which are the two calculations, the first slide being for businesses without employees and the second slide being for businesses with employees. These come directly from the SBA IFR, so it's really important to follow these instructions. But on this next slide, we're just going to run through some quick examples. So the first example that I'm going to run through on the left is just a barbershop. And let's say you run a barbershop, and after you run through the Schedule C form, you found that you have $10,000 in net profit. Again, that's finding your gross income, finding your expenses, subtracting your expenses from your gross income, and you find your gross profit number is $10,000. You'll see on the prior slides that we run through and we show you the multiplier that you'll apply. So because a barbershop is not considered a restaurant or food services business, a business like that will apply the 2.5x multiplier. And you will first have to divide your $10,000 of profit for the year by 12 to get you a monthly amount. So if you divide $10,000 by 12, you get $833 and change. You will then take a 2.5 multiplier to that number, and that will get you your loan request amount. And that's going to be somewhere above $2,000 for a business like that has a $10,000 profit for the year. Now, on the other side of the slide is going to be a daycare company. Let's say because during the pandemic, a daycare was having a hard time getting clients because a lot of kids were home from work, were home from school, and their parents were home from work. So let's say this daycare business did not actually have a net profit for the year. A PPP loan actually will not be, that daycare company will actually not be able to apply for a PPP loan. It's a little bit backwards, but if you don't have any net profit, you will not be able to apply for a PPP loan, which is why Ben had mentioned on the prior slides that you can refer to the other small business loans that are out there, which would be things like the 7A small business program, and also the micro loan program as well. So those are just two quick examples. I'm going to now pass this back over to my colleague Andrew to discuss some general risks about the program, and then we will jump right into your questions.
Thanks, Scott. So I'm just going to quickly touch on the risks of this program. And we know that the government is watching how these funds are spent and is checking who applies. Over the course of 2020, there were a number of cases where applicants either inflated or made up employees in order to access the funds. And those were very easy cases for the government monitors of the program and the funds to track down and bring criminal actions against. And there is an Inspector General of the Small Business Administration who, as recently as Monday, is sort of continues to talk about this aspect of the programs. Even if you win, this says government investigations and responding to those questions can take a lot of time. They can be expensive and intrusive. And then if you are investigated, there are serious risks associated with any fraud in connection with the program. So just a reminder to make sure you put down accurate information and you have contemporaneous support for the numbers and the calculations and the employee counting that you're providing to access this program. Next slide. Okay, so we've received a lot of questions in various areas, and my colleague Ben Stango is going to try and help us categorically sort through those, answer some specific ones, but we're also going to try and talk about the areas of most frequent interest in the questions.
Thanks, Andrew. And thanks to everybody for your questions. I'll note that the Enterprise Center team has done an amazing job in responding to a lot of these questions. So there are a couple I'll start off in the beginning. And then I'll kind of work through and touch on major topics and ask the rest of the team to chime in on those topics as well. But if your question wasn't answered in the chat by the Enterprise Center team, feel free to go ahead and drop it again in the bottom of the chat, and we'll scroll down there and try to hit those as well. So from the very outset, there's a question regarding for second draw loans, the 25% reduction in revenue. This is from Alex. Alex, thanks for this question. It's whether or not that should be calculated on a cash basis or an accrual basis. The answer is that you can choose as a borrower based on the past practices of the company. Generally, when it comes to these type of calculations, the SBA is trying to make the process as simple as possible. So you will find in the interim final rules, and probably through your lender in a much more conveniently formatted manner, the ways to complete these calculations, what exactly is included in gross receipts, things of that nature. The next question here is from James. How will the second draw PPP be interacting with the shuttered venue operators grant and the EIDL? So with this, I'll just take a moment to reiterate what Scott said, that there are a number of programs available to small businesses to support you during this time, whether or not you are eligible for the PPP. On these two specific programs, the Shuttered Venue Operators Grant, you cannot accept funds from that program and the PPP. Those two are preclusive of each other. For the EIDL, this expansion of the PPP has now provided some greater flexibility on the EIDL. So you're able to refinance your existing EIDL loan into the program. You can apply for a new EIDL loan and do the same. And your advance from the EIDL that is a grant is no longer a reduction in your PPP amount. They're now complementary. Okay. So there's a lot of questions here about the 2.5x versus 3.5x of calculating your loan amount. Also questions about what is factored into those numbers. Is it just payroll or are those other categories involved? Does anybody from the team want to jump in and kind of walk through how you get to your loan amount or touch on any of these other topics?
Yes, sure. I can walk through that quickly. Let me just go back to the slide here that shows these. So you can see here, we've got the really detailed steps for how to calculate your loan amount if you are a business that has employees. And if we're going to the 2.5x versus the 3.5x, that specifically, the difference there applies in the second draw loans and not the first draw. And the 3.5x is a carve out for hospitality and food services businesses. But in the first round of the PPP, if you have not yet received a loan, and so you're not applying for a second PPP loan, you're applying for your first, you would use the 2.5x, not the 3.5.
And Scott, this might be a good moment to go to the slides towards the end of the presentation with some of those simple calculations, just to give people a picture of what
Sure.
some of these calcs look like. Do you mind talking through those?
Sure. So we've got a slide here for businesses with no employees, and then a slide here for businesses with employees. It's important to note again that that the key form here is really the Schedule C. But if you are a business that has employees, you also will have to look at the IRS Form 941 because you will have to take in your taxable wages and tips in there for that number. But this slide here walks you through some of the different income numbers and some of the different expenses that you would include to get to your net profit. And then you follow the steps on the other side of the slide to kind of get to what your loan request amount would be. And again, so the examples we have here are for businesses that actually had a net profit. But again, if you did not have a net profit, you will not be able to apply for a PPP loan. which is why there are additional programs out there that you should be able to leverage from the SBA. Hopefully that answers some of the questions, Ben.
Yeah, that's great. Thank you, Scott.
Yep.
So we just got a question in. Can you start over with a new lender? Yeah, that's a good question and a good opportunity to talk a little bit about the relationship between borrowers and lenders. So the answer is yes, you can certainly start over with a new lender. The key thing here is, as we saw in the prior program, and this is a program that will move quickly. It ends March 31st. We expect there to be a pretty hefty bottleneck at different lenders when it comes to processing applications and moving this along. But now lenders and the SBA are positioned to move more quickly. So all of this is to say that if you have an existing relationship with a lender and your past experiences with them have been positive, they seem like they're equipped to be able to process PPP quickly, that's probably the best place to start, because you won't need to go through the KYC, the know your customer process that Scott described, providing them all of the information you've already provided to that lender. You have, hopefully a relationship with some individuals there who can make the process run more smoothly. So that's generally where we encourage people to look in the first instance, but you're certainly welcome to go to another lender. There's nothing requiring you to stick with your first lender if, say, you didn't have a great experience the first time around with the PPP, or generally you're a first-time borrower for the PPP, but you just want to work with somebody who's not your current lender. That's perfectly acceptable. The important thing is that you do have a lender you're comfortable interacting with. I say that because there's a lot of information that comes down from the SBA and Treasury on this program. Changes, tweaks, calculations, all things of that nature. We at Morgan Lewis will stay on top of that information, publish materials on our website, and generally try to disseminate it. But the more that you're able to be in conversation with your lender as changes are made, that this lender is something that is an entity, a person that you can really interact with and get information from, that would be, I think that's the type of relationship, that's the type of interaction that you're looking for. Great. So I think we're going to, in response to some questions that come up, going to focus on the second draw loans. So I'm gonna turn things over to Jamal to talk through the difference between the first PPP and now first draws of this new PPP and the second draw program, teasing those out and focusing on what is this second draw, who's eligible, how is it different. So over to Jamal.
Thanks, Ben. So again, this is specific to the second draw loan, since a lot of you all are wondering. So again, for second draw loans, the threshold for number of employees is 300 rather than 500 for the first time loans. And we note that businesses with multiple locations that are eligible entities may employ no more than 300 employees per physical location, right, in order to be eligible for the second draw, right? So again, 300 employees per physical location, right? And again, we note that you have to have used or plan to use the full amount of the original PPP loan if you're applying for that second draw. So you have to exhibit that and you have to certify to that in your new second draw application. And you also must demonstrate at least a 25% reduction in revenue in either the first, second, third, or fourth quarter of 2020 relative to that same corresponding quarter from 2019. If you all have any specific other questions about the second draw loans, you can just drop it in the chat and we'll be happy to answer them as best as we can.
Hey, Jamal. Just a quick additional point there. So on that last point where you have to demonstrate the 25% reduction, that can either be on a quarter-to-quarter basis. So quarter one of 2020 versus quarter one of 2019, or quarter two versus quarter two in 2020 versus 2019. It can also be on an annualized basis if you're a business that doesn't necessarily track your revenues on a quarter-to-quarter basis, and you kind of only have those annualized numbers. Your lender and the SBA will accept documentation for the revenue reduction if you provide it to them on an annualized basis as well. And we do just have one additional thing here that we could walk through. So just to highlight again, I mentioned earlier that there's an exception for accommodation and food services businesses for the second draw loans. They actually are allowed to use a 3.5x times payroll as opposed to a 2.5. So that's just an important distinction between the second draw loans and the first draw loans, because that's a change there between what kind of the restaurant businesses are allowed to do versus what they were allowed to do on the first draw. And I think it's important because it shows kind of the intent of the SBA is really trying to provide these loans for the businesses that were hit the hardest over the past 10, 11, 12 months. And so they do provide that carve out for those types of businesses.
And again, just to highlight, as Scott notes, that's only for the accommodation and food services industries that you have the 3.5 or 3.5 times the average monthly payroll instead of the 2.5 times for the second draw. So.
Yep.
So I'm going to respond to another shuttered venue question from James and some general questions about ineligibility. Just to be a little more clear on this. So there are some businesses that are categorically ineligible from participating in the PPP. And that set of businesses, I listed some of them before. Again, I recommend checking them out on the SBA website. They include pawn shops, private clubs, a variety of businesses in a wide range of areas. But also, there are even if you qualify for the PPP, there are certain things that will preclude you from receiving funds. So first is if your business is engaged in any illegal activity, if you're a household employer, if an owner of 20% or more of the equity of your business is currently incarcerated for any felony. That's another factor that might come into play. If your business was not in operation on Feb 15, 2020, as we said before, and if your business received or will receive a grant under the Shuttered Venue Operator Grant Program. So if you take a Shuttered Venue grant, you may not take PPP funds as well. It's one of the other, there are many ways in which Congress is trying to prevent businesses from taking funds for the same purpose through these programs. So that's an important factor there, and then the public company element, which likely doesn't apply to any folks here. The one last category that I'll emphasize as well is permanently closed businesses. If your business is shuttered, you are not eligible to take funds, say, to pay off existing debts or things of that nature. That's another factor regarding ineligibility that we want to emphasize. All right, so again, thanks to the Enterprise Center for covering a lot of these questions. Let's see if anybody's question hasn't been answered and you want to drop it again towards the bottom of the chat, we'll try to hit on those specifically. And also, if anybody from the Enterprise Center thinks that we should hit on any additional topics, yeah, go ahead.
Yeah, it seems like, I guess James is confused. If he has already gotten PPP, does that make him ineligible for the shuttered venue operators thing? Like, do these interact?
Yes, he is ineligible for, yes, you cannot have both.
Okay. Hopefully that answered your question, James.
Oh, so James is asking if he took PPP money in round one, not the new PPP program,
right.
PPP money in round
Correct.
one.
Yeah, that's what I'm asking.
Great. Okay, that's helpful. Let's consult the IFR directly on this point.
And sorry to admire this in this conversation in such a small specific niche. I work with and service a lot of entertainment folks here in Philadelphia. I know a lot of us entertainment folks, small companies, theater companies, independent contractors took PPP round one. And if that precludes us from the SVOG, that's going to really screw us, because that's a 45% on last year's payroll versus 12%?
Right. So really important point, and thanks for raising it, James. And I'm glad we can get to some clarity here, because there are so many of these businesses, just like you're describing, who are affected in the greater Philadelphia, a lot of whom we all know and love. So we want to make sure there's the support there. In the IFR from the SBA, it clarifies that this restriction only applies to PPP funds made after December 27th, 2020. So it says specifically for any loan made to a business before December 7th, 2020, it should not apply. Blessing limit. All right. So that's, yeah. I'm reading it here off the IFR. I'm not going back into the statute to confirm generally, but it seems the way that this is written is that it only applies to new PPP funds taken after December 27th, 2020, not PPP borrowers in the first round. So I had a caveat that, it's kind of a niche question we'd want to take a little more time with, but it very much seems, and I think we'd assume that the Congress would not preclude borrowers from taking funding from a new program when in the prior program they were able to benefit and they're still facing problems. So that's, to summarize, it seems like if you've taken PPP before December 27, 2020, you may still take funds through the shuttered venue program. But if you take a new PPP loan after December 27, 2020, you may not take funds through the shuttered venue program as well.
And I think we have a few questions. I see a pattern of a few questions around, what if the businesses have not filed 2020 tax returns? What documentation to use?
Thanks, Blessy. Anybody from the team want to talk about documentation and kind of how to address that?
So I can address just a quick point on that, Ben. You will have to file the Schedule C regardless. That needs to be filed to be submitted along with your PPP loan. In terms of documentation in general, we definitely understand that not all businesses keep track of their gross receipts or of their expenses in the same way. And so I think, going back to Ben's point, you really just want to be as open with your lender as possible and disclose as much information as you can that you have. And so, for instance, if you don't necessarily track your revenues in a traditional book, you can kind of try and gather the invoices that you have if you are an independent contractor and you keep track of them that way. So I'll say in general that the best approach is to kind of disclose the information that you do have, and then work with your lender and your business advisors and your accountants to kind of get any other information that you might need to include in your application. But I will pass that back to Ben to see if...
I think that's spot on, Scott. That's great. That's great. While you were discussing that, we received some additional questions here about net profits and employees, and let me try to clarify this point. So the goal of the program, the main thrust of the PPP, is to support paychecks. It's the Paycheck Protection Program. It's built around paychecks and payroll. So whereas there are lots of bells and whistles and all sorts of changes that have been made, fundamentally, the way that this program was originally created was to give forgivable loans to businesses that were based on their employees' paychecks so that the businesses could keep those employees employed during the pandemic. There was the 25% initially extra that they could spend on general business costs, and then that changed to 40%. It increased, which kind of muddled the original goal of the program. But we bring it back to, this is about keeping employees employed. So when you're doing your calculations, if you are a business with employees, the amount of the loan you're eligible for is based on those employees' paychecks, is based on payroll. It's the 2.5 times average monthly payroll. But if you don't have employees, the SBA has provided another way for you as the individual who owns and operates this business and draws an income from this business to be able to receive a loan. It's kind of coming up with a different way of doing the calculation, since it doesn't fit into the easy bucket of, you got employees, you calculate the payroll, you figure out your loan. So for this, they look at net profits as the proxy for payroll. So if you have employees, the employees and those payroll numbers will inform the calculations for your loan. If you don't have employees, you're going to be using this alternative method for doing the calculations that's solely based on your net profits. And that's the basis on which you will determine the amount of the loan for which you're eligible. And then in terms of the accounting, so this is in terms of the reduction. I see a question on accounting. It is cash or accrual accounting for determining the quarter-to-quarter reduction in your profits. Again, I'll say that is just for second draw. The 25% reduction in profits that you need to show is just for second draw PPP loans. You've already taken a PPP loan, you've spent it, or you have a plan to spend it, and you're taking another one because you've had a 25% drop in net profits. That is just for that program. For first-time PPP borrowers, you do not need to show that deduction. You just need to certify to the necessity of the funds.
Thanks, Ben. Also, I will add, the 2.5 times or 3.5 times multipliers. It's sort of interesting to think back as to why 2.5 times the average monthly payroll was chosen. And I think at the time of the original legislation, the thinking in Congress was that this would be to provide support for 2.5 months as a basis of payroll, because that was wishfully the thought as to how long it might take to support businesses through the COVID-19 pandemic, which has clearly carried on for a lot longer than that original period. And it has now just sort of stayed as a vestige of the first program in the second round as the multiplier, even though originally it had to do with the thinking at the time of how long the federal government wanted to provide this type of payroll support.
Thanks, Andrew. So I think that brings us right to the end of the presentation. Really appreciate all the engagement and questions. As we said, the Enterprise Center is doing a tremendous amount of work in this area. They're processing applications. They're pushing out a lot of really valuable information. So stay engaged with them throughout the process. We in Morgan Lewis will be providing as materials to the Enterprise Center as the program develops to support you. So with that, I'll turn it back over to the Enterprise Center to close things out.
Thank you, Ben and the Morgan Lewis team. For more information and resources, visit the enterprisecenter.com website. We wish you all the best in your loan application process. Thank you for joining us.